Hello, everyone. So I'm Petro, and together with my colleague Michał, we will be presenting a very interesting topic, which is a DAI, a price-stable cryptocurrency, and its application in financial services. So let's talk. We are representing the GFT company. So GFT is a big international technology organization which was founded in '87 here in Germany. We have 5,000 people in 11 countries. And in Poland, we have around 800 people. And we have 3 delivery centers in Łódź, Warsaw, and Poznań. So we mainly specialize in the financial market, in the banking sector. So we're providing services in those sectors. And we also have capabilities in many domains, including blockchain and big data. So let's move to the topic of our presentation. So basically, what is the problem? Why we need a stable cryptocurrency? So as we all know, the blockchain space and cryptocurrency have been growing exponentially for the last decade, and especially in the last years. So from one point of view, it's very good because we have a lot of new projects, a lot of research happening in the field, many new startups, really many interesting things going on in the space. But at the same time, the drawback is that because the blockchain has so much promise and so big potential, that there is a lot of speculation that's going on. And for that reason, many people basically are afraid of this technology because it looks a bit suspicious. There are a lot of currencies that go in price widely, and some of them just then go to zero. So there are a lot of scams, and people basically a bit afraid of this technology because they often don't see behind the price of the currencies. So one of the way to solve this is to have stable currency. So of course we have obvious sectors where it's really needed. It's remittances. If you send money to your home country, of course you expect that the price will not go down 50% like in one day. If you make some payment, the business that accept crypto as a payment, they also expect that the value will be stable. And of course, an interesting application is derivatives and different financial products. Of course, if you have a daily fluctuation of the currency that is much higher than, for example, interest rate, then it doesn't make sense to have financial products. You have to use the stable currency. Oi. Oh, thank you. So, yeah. So, one possible solution that we want to talk today about specifically is the DAI. So, the idea of DAI is very simple. One DAI is 1 USD. And that's what you need to know if you want to use it, if you want to have benefits of this currency. So, the idea is simple, but the implementation is not that obvious. So, this is a global decentralized stable cryptocurrency. So yeah, that means that it's decentralized, it's stable, and it can be used as any other cryptocurrency. So this DAI, this project has been developed by Maker DAO organization. They've been working on this project for 3 years until the first release. So it's not trivial. But they did a really good work because, as you know, the last half a year, the prices of all the major cryptocurrency were really going down. But this currency, it was stable. It was $1. So technically, it's implemented as a ERC20 token on the Ethereum blockchain. So ERC20 is a standard. So by conforming to the standard, this token can be exchanged on many decentralized exchanges. It can be easily used in many decentralized applications. So it's compliant to the standard, and which makes using this currency very easy and and clear. So what is the most interesting about this token is that it's asset-backed cryptocurrency. So currently it's just backed by Ether, but in the future it can be backed by any collateral, including real-world assets that represented on the blockchain as tokens. What's also interesting about this is that it doesn't depend on any third party. So there isn't any one organization which holds some collateral and which you should trust. So basically you have a system of smart contracts and different kind of actors, external actors that are incentivized economically to participate in the system, each of them achieving their own goal, but as a result building the system that delivers this property that one DAI equals $1. So who are those actors who provide the system this ability to sustain this stability? So first, actors is just users. What users want? They just want a stable cryptocurrency that has predictable value, $1. They want to use it for payments. They want to use it for holding, for exchanging for other currencies. So just use like fiat money, but at the same time, they want to have all of the pluses of the blockchain technology. So the second group of people which use this system, they are borrowers and also DAI creators. So what they do, they actually create DAIs. But how they create it is very interesting. So if they have some collateral, in the current implementation it's Ether, what they do, they just send this collateral to a special contract, CDP, collateralized deposit position. So they send it Ether to that collateral, and in return they receive DAI, which are basically generated at that point. We will talk about details how this all works. So third category is keepers. Those basically are external actors which are incentivized economically to participate in auctions. Auctions happens when if some CDB and that loan, value of that loan goes too low because of collaterals price down, then those keepers can participate in the auction and basically buy that collateral for DAI. And they kind of make sure that the system has is in balance between collateral, all the collaterals that exist in the system, and all the DAI supply. We will talk about that later too. So, and the fourth category is maker holders. So in this system, we also have additional to DAI token, we have this maker token. So this maker token provides whoever holds it, they have the ability to govern the system. So what they can do, they can vote on different decisions. They can vote to set some parameters. There could be some emergency situations, and they can vote on different decisions that to make the system work as expected and not to fail. So this is a simple illustration which shows in general how the system works. So actually it's surprisingly very similar to how fiat money are created by commercial banks. So if you have a house and you want to take a loan, what you do, you take your house as a collateral, you go to the bank, and the bank gives you fiat money for that as a collateral. And if you don't pay your loan back, then you will lose your collateral, which is the house. And in the case of Ether and DAI, the systems work the same. So Ether is a collateral, smart contract is a bank, actually. So you take your Ether, you send it to the special CDB smart contract, and in return, you receive DAI, which you can use however you want. Then, in some time, you just pay your loan back, you close your collateralized debt position, and DAI in that case will be destroyed. it's the same with fiat money. If you pay your loan back, basically those money are destroyed, so the balance is 0. So here's the detailed steps of how DAI tokens are created. So first, you just create a CDP contract and deposit some collateral, Ether. Second, you just withdraw DAI tokens, which corresponds to the amount of Ether that you put. Third, you pay your loan back with DAI, and you pay some stability fee, which is basically an interest payment. And fourth, you just withdraw your collateral. If you paid everything successfully, you withdraw your collateral and close the CDP. And those DAI that you paid, they will be destroyed. So this is a positive scenario when you can pay your debt, when the price of collateral is stable. But let's consider a situation when the price of collateral goes down. So currently collateral is just Ether. So imagine that you sent $200 of Ether as a collateral and generated, for example, 100 DAI. So in that case, you have this collateral to debt ratio 200%. But if the price of Ether go down, what will happen is that if your collateral to debt ratio will go below 150, then your collateral will be auto-liquidated with penalty and with stability fee, which depend on how long the position was opened. So what is this auto-liquidation and what is the purpose of that? So auto-liquidation is to basically, if your collateral has lower value than this threshold, 150, that means that your debt is in a risk situation. So that means that if price of Ether goes down more, then those DAI that you have created, they will not be backed by any real asset. So that's why this position is auto-liquidated, and so the balance of all DAI tokens and all collaterals will be maintained, so system is not in a risk situation. So what happens is that that DAI is sold, not DAI but collateral, so that collateral is sold for DAI, and then that DAI is basically burned. Also, you pay this 13% penalty. Basically, you pay this penalty to incentivize you not to have this auto-liquidation. So if you see that your collateral is in danger, what you can do, you can send more collateral to make your position stronger so you will not lose your collateral. But if you lose your collateral, and that means, but basically if all those payments are done, so if all the DAI is acquired, all the penalty is paid, then the rest of the collateral is returned to you. But there could be a situation when the markets are going down very fast, very rapidly. In that situation, it's possible that when collateral is sold, then acquired DAI is not enough to cover your DAIs that you created. And in that case, what will happen that maker tokens will be generated automatically and will be sold on the auctions for DAI, and that DAI will be burned. So this is an interesting mechanism, and basically this is an incentive for maker holders to govern the system in a way that this dilution doesn't happen. Because if maker tokens are diluted, what it means is that all maker holders, they are losing value, because now if the number of maker tokens is higher, then the value of every token can go lower. So that's basically, in essence, what happens when the price falls. So let's have a look and to understand why DAI is stable. So the main mechanism why it's stable, because it's guaranteed that if the system will shut down, then you always get your collateral that has the same value as DAI that you have. So why system can be shut down? It can be in the situation, for example, if DAI is updated to the second version. So currently we have one DAI 1.0, but it will be updated to DAI 2.0. In that case, first DAI will be shut down and second system will be started. Also, it could be a situation where there could be some emergent situations, there could be some hack. And in that situation, you always know if system stops working, that you still, for every DAI that you have, you will get real asset. So that's basically the main mechanism why it's safe and why it maintains value. Other mechanisms, they're also kind of a bit speculative how to support the price. For example, if the price of DAI goes too low, then all the CDP creators, they're very incentivized to close their positions. And if they close their positions, that means that they have to buy DAI. And if they buy DAI, the demand is higher and price will go closer to 1. And another situation, if the price of DAI is too high, basically all of the actors, they're incentivized to create more CDPs, because in that case, when they sell the DAI for the higher price, they get instant income. So, and that will cause price to go down because there will be less demand for DAI. So, and of course, there could be some off-chain stabilization, which basically maker holders can do with their tokens. So, as I said, currently only one collateral type is supported. It's Ether, but it's already in September. They're going to put the testnet version of on the testnet DAI version 2, which will support DGX gold tokens and Omise Go Ethereum token. So, and of course, in the future, the plans are to add as much new collateral types as possible. Why it's beneficial to the system to have many collaterals? It's obvious because first, it allows to increase DAI of supply, because as we know, DAI is created only if someone creates a loan. So that's the only way to create DAI. So if there are more collateral types, there are kind of more different actors that could be interested in creating new DAI. Second is important one is diversification against one collateral crashing. So of course it's easy to imagine that price of Ether, as it actually happened, and or price of other collaterals could go down. And in that case, if the system supports many collaterals, it's much less risky if one collateral goes down, and the whole system is more stable. So this is an interesting feature which was actually announced just a week ago, Dal Savings Rate. So anyone who hold their DAI can send those to a special contract, DSR, and get a continuous reward. So it's very similar to the deposit in the bank. So this is interesting because it creates new incentives for expanding this DAI ecosystem, and it also adds additional mechanisms to stabilize the price by setting governors can vote on interest rate that users get, and by these mechanisms they can control the price. So it's always close to 1. Of course, there are many applications of DAI tokens. There is something not displayed correctly, but okay. So there are many applications. One of the applications is hedging. If you have Ether, for example, or any other cryptocurrency, and in this market you can decide to buy DAI just to hedge your risks, and you can do it on the decentralized exchanges. So you don't even have to go to centralized exchanges. Lending, of course, is also interesting, and it's already working on DAI platform because anyone can lend, can take a loan, and in a decentralized way. Decentralized leverage is also already working because if you created a CDP position, you got some DAI, what you can do, you can buy more Ether. And in that case, you have more Ether than you had before. So your position in Ether is leveraged. So it's already working. Payments, of course, very useful because it's a stable currency. You can, it's also, DAI is very useful as a stable unit of account for exchanges, decentralized exchanges, centralized exchanges, so it's all very useful in there. Also, of course, in supply chain and prediction market, it's also very useful because if you look at the Augur, for example, prediction market, when you make some prediction, you actually make two predictions because you use Ether as a currency that you use for prediction to make a bet, and you don't know what the price will be. So you make basically two predictions at the same time, which is kind of strange. So next I want to give a word to my colleague, he will talk about some concrete cases which our company is looking, and yeah.
Okay, Petro told us about the possible use cases, but what are the real cases? First of all is stability. People are interested in keeping the DAI as stable as possible. And this way they can avoid the fluctuation of a crypto price, for instance, Ether. Another real use case are the centralized financial products like, well, the main way the DAI works, I mean the loans. And as opposite of the stability, there are speculations, which basically people buy DAI, and they are just betting that the Ether they used for this transaction will go up in the price, and then they can say DAI and get Ether and earn even more money. All right, this should be like this. Maybe you remember that on the previous edition, Piotr, our director, say hi. He told you that we, as a company, create enterprise blockchain platform based on Corda. This is a quite interesting case because we are cooperating with directly with the creators of the framework, the R3 consortium. Implementation was based on Corda 2.0, which, well, is kind of open source framework. I mean that everyone can say what's wrong, what should be better, and even propose some fixes. However, it is still R3 that will take care what will and what will not be released. The framework is in Java, and above Java sits the Kotlin. It is quite funny because right now it has only H2 database support. They try to focus on stability, not on speed, which kind of not always works, but it's a different story. And the most interesting thing is that it is first ever commercial Corda deployment infrastructure. Now, this platform, what we have already developed is fraud detection. Very, very short. It is projected to detect all the double or even triple spendings. As you may know, the Italy financial market, it is based on this kind of financial application. Basically, Italians with the invoice which was not already paid, they go to bank, they sell it to bank for, I don't know, 80–90%, and they got their money before the term that would be paid normally. But they seem to try to sell the same invoice in the different places. And this was such a pain in their necks that they decided to do something with it, and the result is this platform of ours. However, double spending detections was more or less 10% of the future target functionality. This was supposed to be a big interbank platform for all kinds of usual bank deals. Now, when we heard about DAI, it was our first idea. Hey, let's use it as an interbank currency. First of all, it is stable. One DAI is $1, more or less. It is backed up by real money. It's soon planned to be. And most of all, is very simple. It's like another currency. All the bankers that are dealing every day with euros, dollars, would use just another currency, DAI. However, for now there is only 50 millions of DAI, and $50 million deal is not a big deal, so huge investments would be necessary. So, well, maybe it is good to at least pick up an idea. Assets that those deals are concluded in could be tokenized. All the transactions would take place in the blockchain ecosystem with all its benefits. There would be, of course, less paperwork. And the funny thing is that those deals could be conducted even in place that the bank is not physically present. You know, one DAI, $1 connected to the global global blockchain network. Yeah, you could even conduct some dirty deals in Rwanda or Sierra Leone or whatever. So, what would be DAI benefits for developers? It is already existing ecosystem. It is working for half a year, but it is. It is proven. It is blockchain, so it is fast, secure, consistent, censorship resistant, and everything what Piotr said. If this is given to the computers, especially in the blockchain architectures, there are less single point of failures, like, I don't know, some guy went to sleep, turned off his computer, didn't receive an email, and everything crashed. And ultimately, which would be the main argument to convince bankers, it is just cheaper. I think that every one of you met the situation that the client wouldn't like to do something because it was good. Yeah, it was good, but it was just expensive. I think that one slide was missing. Okay. Oh, yeah. And there is one thing that all the big organizations, not only financial, are quite opposed the new technology. In this case, they think that all the cryptocurrencies, no matter if it's DAI, Bitcoin, Ether, or even the tokenized asset, have some problems. First of all, cryptocurrencies are unstable. I'm not deep into crypto, but as far as I know, the Bitcoin price can fluctuate even 50 or 20% a day, which, well, you know, if someone would receive payment in Bitcoin, and between the received payment and changing it to cash, it would lose 20%, they wouldn't be happy. Second, what is a backup behind this? Behind a DAI, there is a tokenized asset. Right now it is Ether, then soon they are planning to do the Digix tokens and everything guys said. So this will be cryptocurrency backed by real asset. They know what they are operating on. Next thing is scalability. They do not like it because the transactions on the blockchain network are awfully slow compared to the, for instance, like Piotr said, credit card systems. And one last thing is simplicity. Understanding the way that the bitcoins are mined, the blockchain ecosystem, this is the whole different story. They just don't get it. And yeah, going back, this is all we could propose. Something stable, something backed up by real money, real assets of the banks, something simple equal to one DAI. Even if it is something tokenized, they can do in blockchain, they can do less paperwork, They can reach many new places, and well, this is cheaper. And this is what should convince them, at least. If there are some questions, please do not hesitate. Thank you.
So the first question is that on one slide you have that it's slow, and on the other slide you have that it's fast.
Depends from the point on which you sit. For you, it is slower. For me, it is faster. But no, being serious, it really depends what you are comparing it to. Because some systems, I know you have the personal experience are very slow, and the blockchain system can speed it up. But compared to the other systems, it is awfully slow. As slow as Ethereum is, yeah, but Ethereum compared, for instance, to blockchain, it is, well, quite fast. Ethereum aims one transaction to be how many? 10 seconds? Instead of blockchain that it is, well, need to propagate through the network, so it takes more time. But yeah, DAI is as slow or as fast as Ethereum is.